What's up, traders? It is the post-election video as promised on Twitter for Twitter peeps only. Told you on that election video, if you want to find out what our strategy was going to be after 4 days beyond election day, well, you had to follow me on Twitter. So here we are. I think I'm actually going to be nice and post this link in the description of the election video, but you watch. There's going to be so many people in the comment section of that video wondering what we're supposed to be doing right now, even though I told you what to do. My comment section is a magical place. Anyway, you're here now, so let's go over the game plan. First off, not to pat ourselves on the back, but we pretty much did the right thing, I think. I think a lot of you think that as well. I got a lot of comments from people saying, hey, really glad I shut all that stuff down before the election. But this was an easy prediction. It was close. We knew it was going to be close. No big surprise there. And it's also not over. The media says it's over, but that doesn't mean anything. Trump still has a right to legally protest, just like if you remember Al Gore did back in 2000. Whether you like it or not, he can still do that, and he's going to do that. I don't know how long it's going to take. I think I speak for all Americans, not all Americans, but most Americans when I say I think we all just wish this was just over and we had some kind of answer regardless of who it was. But it's going to get stretched out, and we kind of knew that before. So we need to put an intelligent game plan in place going forward, because exactly what we feared was going to happen has happened in this case. But the big banks did have their fun, but not like they did before in 2016. We don't even really need to go to a Forex chart. I'm sure you guys all saw the price action during election day. Shout out to Bloomberg, by the way, for being very neutral and just really reporting the news. I watched them from pretty much 1 o'clock to 10 o'clock Pacific Standard Time. And during that time, it was mostly just states reporting their final tallies that we already knew how those states were going to vote. The swing states didn't even come in until much later. But still, I noticed on the 5-minute chart of the euro dollar, for example, that the ATR went up 10 times higher than it normally does for your typical Asian session. So there was plenty of movement, but for the reasons we talked about up here, it was not as dramatic as it was before. So I'm still really, really glad we sat out. But thankfully, we didn't have that Armageddon situation for a lot of traders out there. So that was nice. Now, the way we approached it, if you guys don't remember, we'll do a really quick review here. We shut everything down, and we did it 4 days prior to the election. We sat out election day, waited 4 trading days after, and here we officially are. I put this video out a little later than I wanted to. I had some travel issues. Thank you for being patient. But it's time to reassess, and that's what we're going to do here right now. Now, what we also did from a buy and hold standpoint was continue to hold on to our investments, which I think turned out to be a pretty good idea. I mean, gold shot up. It came right back down. Crypto kept climbing. Stocks went up. All the buy and hold people that didn't panic and sell, just because an election was coming, are probably pretty happy right now. This story's yet to be completely told, but as of right now, I think holding the buy and hold was the right move. And the main thing, and I really should have addressed this more in the election video, the biggest thing I wanted all of you to avoid was slippage. Slippage is the one thing that every Forex trader should fear, probably more than anything. Slippage is what happens when price moves so fast because such an anomalous event just occurred, like a flash crash or an election that goes in an unpredictable way, happens that you have a stop loss in place, but price moves so fast that it goes beyond it without triggering it, and then just keeps going, and there's nothing you can do about it. Something like that can wipe out months, maybe even an entire year of gains in your account. It can take you from break even down into such a hole that it would take you years to get out of it. All right? This is worth sitting out for 9 days. When are the 2 major times something like this can happen? Like we just said, a flash crash, which we don't know when those are going to happen, or a major election, when we do know when those are going to happen. So if we know it's going to happen, it's smart and it's prudent to sit out. But guess what, traders? That time is over. What do we do right now? We jump back in that pool. I know there's some uncertainties out there. Trump could come back and win this thing based on all these legal loopholes. It is possible. Probable, we don't know. But it could happen, and that's going to send the market into an absolute frenzy if it does. But it won't be all in one condensed move like Election Day will. So even though something like that could happen, all sorts of things could happen in the next couple weeks. We need to be ready for it, but that should not stop us from trading. All right? What we need to do is start mitigating risk on the most at-risk areas should something like this occur. So, for example, United States dollar pairs. And I put until end. What that means is until we know 100% for sure who the next president of the United States is going to be, I am personally taking one currency out of 8, just like I did for Brexit with the British pound, and I'm going half risk on every United States dollar pair I trade. I am also doing the same thing for metals and for oil. This really doesn't have much to do with the dollar component to those things. I just know that metals are a flight to safety, and oil is extremely volatile right now too because of the presidency. Biden really hates oil and fracking, yet oil still shot up a lot today. A lot of weird stuff going on, and I expect some more weirdness in the next few weeks probably. So until we actually know who the president's going to be, I'm going to take half risk on these as well. For crypto, all you crypto traders out there, I don't trade crypto, I hold crypto. But I know a lot of you out there do trade crypto, so this is for you. You guys know that during the election, you guys might have had some movement, but you didn't have the drastic movements that we did in the Forex world and in the indices world, for example. So you guys just carry on as normal. There's really no reason to make any adjustments here. But the one place I'm going to make a major adjustment, and we'll talk about this in a moment, is in indices. This really goes against a lot of what we talk about here at the channel. I'm going to do some things by feel. I'm going to make a prediction, all things we kind of know not to do. But you guys know as much, you guys know just like I do. We are in an unprecedented time with the stock market, with everything the Fed is doing, everything with COVID, how the economy's in the toilet, but the stock market is still weirdly doing really well. I mean, this is something that nobody has ever seen in their entire lifetime, no matter how old you are. And indices and the entire stock market is really on rocky ground right now. And the one thing to really tip this over the edge could happen during this election season that is not quite over. So I am jumping back into most markets with no fear. But I am mitigating my risk by taking half risk here, half risk here. And, I trade indices on the weekly chart. I'm going to miss out on 8 or 9 candles. I'm just going to let the end of the year play out. If something really drastic happens, and it happens really fast, I won't catch it anyway. But I'll be able to sit back and let the madness occur, jump back at the beginning of the year, and maybe catch that nice continuation trade after the retracement. That's what I'm kind of hoping happens. Again, it's a wild prediction that means nothing. But you guys know as well as I do that indices are really on shaky ground. And if there's one place to really pull back and let things occur, it's going to be here. Actually, let's go ahead and take a look at it real quick. I went ahead and made this for you here. It's the S&P 500 daily chart. Even though I do trade on the weekly, let's look at this so we can see Election Day, which is right here, 11/3. Now, there was talk all leading up to the election that a Biden presidency would be generally bad for stocks. Yet, of course, what everybody thought was going to happen happened completely opposite. That entire day, there wasn't even a bunch of movement up and down. It was just a straight shot up. I guarantee you this screwed over a lot of people. There were some really hardcore shorts as soon as that Biden money started coming in. Now, the very next day is where you had a ton of nonsense, a lot of big bank action up and down, but we still ended up, and it just kept going up. And then you had today where that vaccine rumor came out, crazy manipulation to the upside before settling back down. So we talk about this a lot on the channel. The market is never officially going to turn over unless you really get rid of a lot of those hardcore shorts. You need to make some of those hardcore shorts, to which there are many of them in the stock market, say, you know what? Maybe I was wrong this whole time. I'm going short. I think Biden's going to win. That's going to be bad for the market. And I'm going to be on the right side of history on this one. And then my presidential prediction comes true, yet the market goes the exact opposite way I thought. That's really enough to make anybody second guess themselves. And if I'm the big banks, that's what I want. You know, I always try to put myself in the position of the evil overlords. And I will do anything I can to make all these hardcore, I'm not going anywhere, I'm short in the market, come hell or high water, shorts, stop and think, maybe I was wrong this whole time, and maybe it's in my best interest to go ahead and flip long. And I just think this would be a perfect way to do it. Now, as I said before, this is not based on no-nonsense Forex principles. This is based on my prediction of the market, but I said this is a completely anomalous market, nothing like anybody has ever seen before. You just got to do your best with it. I feel like, for once, the fundamentals are really in control over the technicals when it comes to the actual stock market, and it's just a place that I am happy, since we've had such a good year in indices in 2020 already, as most of you traders already know, sitting this one out until the end of the year, and then jumping back in when we get a better picture of what's going on. You may do whatever you like. But look, we are back in this market, and we are back in this market full force. Why? Because we're traders. That's what we do. All right? Especially if you're a professional trader, as I am, or you want to be a professional trader someday, you better start acting like one. And a professional trader does not sit out for fear of a maybe, possibly, we don't know yet. The only time we ever sit out is when we know a period of time is occurring that's rare, but it happens, and slippage is very possible during this time, and we're not going to have a whole lot of control 3 or 4 days before and after. You know, it rarely happens. When it does, we sit out, but when it's over, we jump back in. All right, this is what traders do. This is what successful financial people do. Every successful financial person you've ever heard of does this right here. They take risks at every turn, but they're smart enough to minimize those risks along the way. A lot of risk takers skip this step and end up crashing really hard. We don't do that because we do this, but we also do this. All right, now how do we do that? Well, we take that same approach as we did at Brexit. We scale back on those United States dollar pairs, if only for a moment, and we understand there could be some nonsense coming down the pike, but it's less likely than it was during election day. So we are not going to trade scared. We're going to minimize our risks, but we're going to take those risks. We're jumping in. Unless it's indices, then we're not, or at least I'm not. You do whatever you like. But for the most part, there shouldn't have been any question about what our approach was going to be today. We are legitimate Forex traders. We only sit out when we absolutely have to during those rare times, and that time is officially over. So get your ass back in that pool, build, trade, crush. Go get it.